Okay, so let's go ahead and get started. So my name is Desiree, and I'd like to first of all thank you guys for taking the time to join me today. And what we're going to be discussing today, so I'm going to share my screen with you, and I want to make this as interactive as possible because I don't know if any of you have any specific questions that you'd like to ask me. I'll be more than happy to answer any questions that you have. So today we will be talking about, so like a very casual general boot camp. And I'm just going to go over just certain things that I've noticed that a lot of beauty industry professionals struggle with as hairstylists, and some of the things that I also struggled with when I became a hairstylist way back in the day. And I was a hairstylist for like 20 something years. And I actually continued doing hair even when I started, my accounting business. But I stopped, I think it was in 2020 because of COVID. So after COVID, I said, oh, that's it. Because I was only doing it at some point, I was doing it more for a hobby. And then when COVID rolled around, I said, okay, that's it. End of story. No more. So I've been in the industry for quite a while. So I'm very familiar with, the ins and the outs of our industry and the things that you guys deal with. All right. So I'm going to start out by sharing my screen, and then we're going to talk about certain topics. Now, if I can figure out how to share here we go. I think it's right here. Let's see, share my screen. Let's share it. Okay, so let me know if you can see my screen. Just type yes in the chat box, please. So okay, great. All right, so this is your beauty industry. So they're going to be four different parts of this. And I decided to break it up into four different parts because there is really a lot to talk about. And I didn't want to jam everything into one day. I wanted to sort of spread it out because I only have an hour. So I want to make sure that I, try to go as deep as I can with every subject. Now, I always say this to my clients, and usually I say it as a joke, kind of, but not really. I always say that, cosmetology school forgot to include business classes in their curriculum. And I say it kind of jokingly, but at the same time, I really do think that it's something that we were, I don't want to use the word cheated out of, but it's something that they failed to prepare us for, was to go into the real world as business owners, because a lot of cosmetology students usually wind up being either independent stylists, or we come out wanting to own a salon. I know when I graduated, I jumped right into salon ownership, which to me, it was a mistake. I shouldn't have done that. I should have gotten my feet wet first before I jumped out into ownership. But, sometimes people do that. And a lot of people do come out and they become independent contractors. And they're not ready, okay? So the school does not prepare us at all for anything business-wise. So one of the things that I wanted to do was to try to bridge that gap between what we should have learned in cosmetology school and what we didn't. And most of the information I'm going to be sharing with you are things that I've dealt with my clients, because I have a lot of clients who are in the beauty industry profession, and there's a single theme that runs through a lot of cases that I deal with, right? So everything normally stems from not really understanding what to do at the very beginning. So you just start your business, you didn't start things out properly, and then eventually, as time goes on, a couple of years go on, then you start to feel, the lacking, because there's certain things you might want to do. There's certain situations that you might find yourself in, and it's hard to fix it right there. You almost have to go all the way back to the beginning and roll forward to fix whatever happened. And just for an example, if you remember during the whole PPP loan thing, right? There were several people that didn't qualify for the loan. And the reason they didn't qualify is because of how they set themselves up or how they treated themselves as business owners. So they didn't really understand, when you choose a particular business structure, what do I need to do? What are my responsibilities, right? What are my compliance responsibilities as it relates to the IRS or as it relates to the state or whatever the case may be? So today we're going to be talking about the legal structure, learning how each type of legal structure impacts you as a business. That's extremely important. One of the first things that you should take into consideration before you, when you start your business. And it's never too late to switch. So let's say you started out doing, as a sole proprietor, then you decide you want to become a multi-member LLC or an S corporation. It's never too late. You can switch at any time with a few exceptions, and we'll talk about those. And then also we're going to talk about employee ID number versus social security number. Which one should you use and why? And this is important too, because a lot of times you have booth renters that come out and they say, well, I'm only a booth renter, so I'm just going to use my social security number. I'm not going to bother getting an EIN number. So I'm going to talk about why it's important that you do, take that into consideration. And then we'll talk about business bank accounts. How many should you have? And why should you have a business bank account? And why it's important not to commingle your funds with business and personal, especially if you are an LLC or if you're an S corporation or even a corporation. It's extremely important that you don't commingle funds because it does have some negative ramifications if you find yourself in a certain position. All right, so who am I? Well, I'm Desiree, and as I mentioned earlier, I'm a former hairstylist and salon owner for over 20 years, turned certified public accountant. So I really do know this industry inside out. Now, as a hairstylist, I worked as a booth renter. I worked as a salon suite renter. I was a W-2 employee. I was an independent contractor. I was an educator and a platform artist for Farouk Systems. If you remember Farouk Systems back in the day, that was they're the ones that I guess you could say started the whole silk therapy, but I guess ionic flat irons coming out. And I think the Chi iron was the first iron they came out. No, it wasn't a Chi iron. It was some flat iron that they came out with back in the day. And that flat iron, if you remember, was $100 back then. And it was like a shocker to most of us because we were so used to buying hot tools that cost about, $20. And all of a sudden they came out with this ionic iron for $100. That was back in, I think, maybe 2000s or somewhere in there. But so I worked with them as an educator for about 10 years or so. I was a platform artist. So as a result, I am very familiar with the beauty industry. And now, as a CPA, as an accountant, I help beauty industry pros build confidence and clarity around their business finances, okay, which is so important. Now, so today, let's see, we are going to talk about, I think we already discussed that. All right, so let's start out with the legal tax structure. Okay, let's start out with your legal tax structure. So when you initially start, the first thing that you should consider is what type of legal structure do I want to be? And the reason why this is important is because how the government treats you or how your vendors treat you or how anybody treats you is all going to be predicated on the type of business structure you are. Back to the whole PPP loan thing. If you remember back then, the banks or the IRS and the banks were requesting certain information from business owners, right? And the type of information they requested was all based upon the type of business structure you were. So if you were a sole proprietor or a single member LLC, they wanted your Schedule C, and that was all they wanted to look at. If you didn't have that, then you didn't qualify. If you were an S corporation, then you had to show payroll, like you being an employee, like a W-2 employee. You had to show that you paid yourself, with as an employee of the business, not just simply taking out money. Okay, even as a partnership, they wanted to see certain things. As a regular C corporation, they wanted to see certain things. So, it really does matter that you have a clear understanding of your business structure when you first start. Now, that being said, when you first start, you may or may not know how your business is going to progress. So it's perfectly fine to start out as even a sole proprietor or a single member LLC. And then as time goes on, you can switch. And normally I say, especially if you're a salon owner, it's important. I think that it's very important that you set yourself up as an S corporation. And I'll tell you why that is. Are there any salon owners? If you're a salon owner in here, just type in, yes, I'm a salon owner. So let me change this. This is right. So let's see, are there any salon owners? Let's see. Okay, yes, you're a salon owner. All right, so as a salon owner, it's important that you really get you sit down with a CPA and figure out the revenue that's coming in, how much is coming in, how much you're bringing in, and how much your workers, whether they're employees or whether or not you have booth renters, how much they're bringing in. Because as a salon owner, you want to make sure you're maximizing your tax liability, right? You want to make sure you're maximizing how much you pay, or rather, you want to pay as little in taxes as possible. And the one thing that really gets you is something that's called self-employment tax, but I'll talk about that later. But there's something called self-employment tax that if you are a salon owner, you absolutely do not want to be paying self-employment tax on the money that you're receiving from your booth renters or from your employees. So let's start out with a sole proprietor. Okay, so what is a sole proprietor? So basically, a sole proprietor is a person who just decides, okay, they decide one day, you know what, I'm jumping out of bed and I've decided that I want to start a business. So I'm going to start my business right now, today, okay? There's nothing is required. Now, in some states, you are required to register maybe as a doing business as. So from state to state, it can be different. So the information I'm giving you right now is going to be based upon federal. Depending upon what your state is, they may have certain rules and say, okay, even as a sole proprietor, we require you to register as register a DBA, doing business as. But for federal purposes, as a sole proprietor, there is absolutely no distinction between you and the business. You are one and the same. No distinction whatsoever. And why that's important is because comparing that to a single member LLC, in the eyes of the IRS, there is also absolutely no difference between a sole proprietor and a single member LLC. So if you set yourself up as an LLC, you registered your business as an LLC with the state, some people think that, oh, because I've done that, now I have a totally separate business that's separate from myself, and therefore I need to file a tax return for my LLC. And in addition to that, file a tax return, for myself, which is not the case. As a single member LLC, the IRS disregards that and looks at you completely as a sole proprietor for tax purposes, right? So when you set yourself up as an LLC, it's really for state purposes. It's for state's purposes. And what that does is it protects you. So it's really a way to protect your assets. Now, I'm not an attorney, okay? And I don't play one on webinars. So I'm just going to give you some general, broad information. And I always advise my clients, if you need legal advice, you definitely want to speak with your attorney. Now, that being said, as a single member LLC, what that is doing is you're saying, okay, if, God forbid, something happens and someone decides to try to sue me for something that I did within my business, as an LLC, I'm trying to create some protection between my personal assets and the assets of my business. So if a person comes in and they try to sue the business, okay, they can only sue the business for what the business is worth. Okay, I have a couple of blow dryers, I have a couple of flat irons, I have some stations, I have this amount of money in my business account. So this is what they're going to be looking at, right? They're not going to be looking at your personal assets like your home and your vehicle and whatever else you personally own. Technically speaking, That is that's usually the reason why people set up these LLCs, is to try to create that separation, right? But that being said, a person can still sue you personally. They sue you personally, but that of course changes everything. And that's the reason why I say it's important to talk to an attorney to find out, what else you need to do or can do to possibly protect your personal assets if you should find yourself in that position. So now, one thing that's important, if you do decide, if you are a single member LLC, and I think that let me step back a little bit. So as a sole proprietor, you don't have that distinction, right? So you are the business. So if someone sues the business, they're literally suing you because you're the business, right? If they're suing you, they're suing the business because you're the business. So even if you are a sole proprietor and you are you're a booth renter, so you work in a salon behind a chair, and that's how you work, it's still advisable to set yourself up as an LLC, okay? Because just because you are working for yourself, by yourself, behind a chair as a booth renter, doesn't mean that somebody can't come and possibly sue you for something that happens. So in order for you to protect yourself, you want to make sure that you create that LLC and you don't work as a sole proprietor. Now, being a sole proprietor, it's okay. There's nothing wrong with it. And depending upon the kind of business you're in, sometimes it's okay. Like let's say you're a writer. I mean, how can you hurt someone as a writer? You write blogs or you write something. So yeah, okay, that's fine. You decide to remain a sole proprietor. But when you're doing something, you're dealing directly one-on-one with people, because people are sue happy. You want to make sure that you try to protect yourself as much as you possibly can. So even as a sole proprietor, I advise my clients to set themselves up as an LLC. Now, that may be a little bit challenging if you're in a place like California, where they charge you $800 every year, just to renew your LLC, to renew your registration. True, but you have to think about it. Okay, should I go ahead and not become an LLC because of $800 and take a chance of possibly, finding myself in a position that I don't want to be in and then wind up paying more? Or should I just go ahead and pay this $800 and feel a bit of protection? Once again, that's something you want to discuss with your attorney. So I'm just giving you some ideas and some facts. Now you take that information and you speak with, legal counsel to see what their suggestions could be. Now, one other thing I found is that individuals or people who understand the protection that they get from being an LLC, they'll say, okay, I'm an LLC and therefore I'm automatically protected. Well, what I would say is that as an LLC, okay, there are a couple of things that you need to make sure you do not do to pierce the corporate veil. So what do I mean by piercing the corporate veil? Piercing the corporate veil means that if you do ABC, the protection that the LLC provided to you is null and void. It doesn't exist. It doesn't matter. You have done this, and therefore the protection no longer applies to you. One of the main things that I see people do is not maintaining separate bank accounts. So as a single member LLC or as an LLC, period, you are S corporation, LLC, as a corporation, you are required to have a separate bank account from your personal. You do not commingle funds. You're not, because if you commingle funds, and let's say, God forbid, you get sued and you're in court, one of the things that the attorney is probably going to want to know is, okay, so let's take a look at your banking. Are you commingling funds? And if you are, that automatically pierces the corporate veil, automatically. So you're not allowed to commingle funds. So make sure as a single member LLC or as an LLC, period, whether you're a multi-member or single member or an S corporation, that you have a separate bank account outside of, a personal bank account, and you have your business bank account. That's very important. All right, so let's see. Let me go to, so then we have the, and I didn't change this. This should say multi-member LLC or partnership. So let me just go ahead and change it now. So it's multi-member, oops, can't spell. It's multi-member member LLC / partnership. So now if you are an LLC that has more than one owner, automatically the IRS treats you as a partnership. So when you file your taxes, you're filing your taxes as a partnership. Now, I have found that I have actually worked with a few salon owners who say, "Oh yeah, we own the business together, but here's how we operate. We both just contribute, you know, we contribute our funds and pay the rent, or we contribute our funds and we pay for expenses." So if you own a business, a salon, and it's two of you that own it, automatically you are required to file a 1065 tax return. And I have seen salon owners who don't comply with this. And this is another thing that hurt some people during the whole PPP loan thing, is that they were actually partners in a partnership, but the way that they were treating themselves, the way that they set things up, the way they even filed some of their tax returns didn't reflect the fact that they were a partnership. So they were doing it all wrong and had no idea they were doing it wrong until it was time, until they were faced with needing something. All of a sudden they realized, oh, we've been doing this wrong all along. So if you are in partnership with someone, you have to make sure that you are filing the right tax return, which is a 1065. And then also, if you're a multi-member LLC, same thing, you're treated as a partnership. And if you are a partner in a partnership, it is extremely important that you, whether you're in California or wherever you are, no matter what the cost is, you want to make sure that you register as an LLC. And the reason is because when you put two people together, okay, if you are a partnership and you are working with someone, you are equally as responsible for their mess ups, for their screw ups. So if they screw up, it's like you screwed up. You can be held liable for something crazy that they did. But now because you're both general partners of a partnership, so when you're a general partner of a partnership, you guys have equal responsibility for what the other person does. So in order to try to mitigate some of that, is that you want to try to set yourself up as an LLC, that as a multi-member LLC, that way you're mitigating some of that responsibility that you would have otherwise have had if you just remained a plain old partnership. Once again, this is an area that you want to speak with an attorney about, because I mean, I have an idea of what I'm talking about, right? But I'm definitely not a legal connoisseur. I'm not a legal expert. I do accounting, bookkeeping, and taxes. That is where my expertise lies. But just to give you information, though, just to let you know that as a partner, that you want to definitely protect yourself and not just be a general partner in a partnership. All right. So whenever you have a business that you're working where you plus somebody else, automatically you are a partner in that business. All right. So the next thing is the S corporation. Now, the S corporation is not a legal structure, right? It's not a legal structure. What it is you are electing to be taxed as an S corporation. So what does that mean? That means that if you are a single member LLC, if you are a multi-member LLC or a partnership, if you are a C corporation, all of those entity types can all elect to be taxed as an S corporation. So the S corporation is an election. So you could say, you know what, we're a partnership, but we have decided that we want to be taxed as an S corporation. That's what that is. You can elect. You can also say, okay, I am a single member LLC, and I'm starting to notice that I'm making, let's say I'm profiting, let's say about $100,000, or depending upon, let's just say $100,000. And you're saying to yourself, okay, it's about time that I now start thinking about becoming an S corporation, because as my income goes up, I am going to be paying way more in taxes as a single member LLC than I would if I were an S corporation. So then you can elect to be taxed as an S corporation. So so that's how that works. Now, usually, if you're a salon owner and you have employees, or you have booth renters that work at the salon, I always suggest that we sit down and we start looking at those numbers to say, okay, who's bringing in what when it comes to rent? What are you making from your booth renters or from your employees? Now, as if they're booth renters, normally it's fixed. So there really is nowhere to go because they're paying you booth rent. But let me just say this though, before I even go any further. As an S corporation, if you are an S corporation, you're not allowed to have booth renters. So let me start by saying that as an S corporation, you and everybody in your business has got to be an employee. You have to be an employee on payroll. Whoever works in your salon has to be an employee. And I know that people will say, well, I know so-and-so, she's an S corporation and she has booth renters. Okay, yeah, that might be true. But just because she has booth renters doesn't necessarily mean that she's doing things correctly. And the person can get away with it forever. And because you're getting away with it, the assumption is, oh, well, I must be doing it right. Because after all, the IRS or the state hasn't come knocking on my door asking me why I'm doing what I'm doing, right? So the fact that the IRS has not knocked on your door doesn't mean you're doing it right. You're going to find out whether you're doing it right or not when it's time for you, when you need something. Either you need a loan from the bank, or if you need, in this case, like the PPP loan, where people realize, oh, wow, I was doing this all wrong. Or if you ever get audited. If you get audited, then that is, a huge thing. You're required as an S corporation to pay yourself what is called reasonable compensation. And if you don't do that, it can be a problem. Or everyone working in the salon has to be an employee. So if you are set up properly and you have an S corporation and you have employees, so for sure you want to be an S corp. You don't want to be a single member LLC or even a multi-member LLC with employees, because I can almost guarantee you are paying way more in taxes than you should. So if you happen to be one of those people, I would suggest that you consult with an accountant. Let them just do a simulation, a scenario, and say, okay, here is what I'm paying as an LLC with employees, and here's what I would have paid or would pay if I switched to an S corporation with employees. Look at what that tax saving is and see what it is, to see if it makes sense. Because the money that your employees are bringing in, you should not be paying self-employment tax on that at all, okay? Again, I said a thorough consultation is strongly advised, And then also another thing is, you want to also really be careful before you elect the S Corp status, because if you just randomly elect, and then, because as an S corporation, there are certain requirements that you have to have. You have to maintain your books, right? You have to be on payroll. As an S corporation, you're really supposed to have meetings with the board. If it's just you, well, then you're the board. You can have meetings with yourself. So that those things are required. So you want to make sure, and also you're going to be required to have two different tax returns, because you have to have your business tax return prepared, which is your 1120, and then your personal tax return has to be prepared. So that's an additional cost. In addition to that, you're going to be on payroll. So you have to now think about payroll tax returns. Every quarter, a payroll tax return is due. First quarter, second quarter, third quarter, fourth quarter, for both the states and the IRS. So there are some extra requirements that you would need to, you would have to take care of as an S corporation. So you want to make sure that before you make that election, that it's going to, the savings that you have, and if you're doing it strictly for tax savings, because there are other reasons why you might want to elect, but if it's strictly for tax savings, you want to make sure that you are actually saving what you consider to be enough. Because once we run the numbers, you might be saving $5,000. For one person, they will say, you know what, that's enough for me to switch. And another person may say, I don't know, 5,000 is not really enough for me to go through all the other stuff that I have to go through. But at some point, as that money starts to rise, you start to say, oh yeah, absolutely. Because if you're saving $30,000 in taxes, which I've saved for some of my clients, then yeah, you're going to say, oh, absolutely, I'm going to do what it takes. I'm going to conform with the requirements to be an S corporation because look at what I'm saving, right? So you want to make sure that you one of the reasons why you want to make sure that you're doing it when you think you're ready is because there's a 60-month rule, and the 60-month rule means that if you just arbitrarily decide to say, okay, I'm going to elect to be taxed with an S corporation, and then you find out about, I don't know, 5, 6, 7, 8 months down the road that this isn't working for me, and you decide to pull your election, to get your election revoked, you cannot elect S corporation for another 60 months. That's 5 years. So if your business starts to really grow within that 5-year time period, you're not able to elect to be taxed as an S corporation because you revoked your S corp privileges, or I should say your S corp election, less than 5 years ago. So you want to think about that. Next thing is your C corporation. Well, unless there is a really, really good reason, I wouldn't recommend this option because, of course, you have your double taxation and other things that can occur within C corporations. And from my experience, that's just too complex for most of the beauty professionals that I personally work with. So yeah, I definitely wouldn't suggest that one. Okay, now let's see. So the next thing we're going to talk about is employee ID number versus social security number. Okay, so why every business owner should use or have an employee ID number. Number one, which is an obvious one, is because nowadays you don't want every Tom, Dick, and Harry having access to your social security number. And there are certain forms you're going to have to fill out. Excuse me. And if you got to fill out a form, let's say, for example, you have to give somebody a 1099, or rather someone needs to give you a 1099, or whatever the case may be. Either way, one of the things that is required is the EIN, is either a social security number or an EIN number. So if they're giving you a 1099, so let's say, you own a hair salon and then you have booth renters, or whatever the case may be, or let's just say you are a booth renter. Okay, so as a booth renter, you're paying your rent to the salon, right? So you are going to have to give them a W-9 to complete, get a salon owner a W-9 to complete, so that way you can wind up giving him or her a 1099 at the end of the year. Well, you the salon owner, you don't necessarily want to write down your social security number on the W-9, right? So it's best to use your EIN number. So even if you are a sole proprietor who at times has to provide somebody with your number, you want to give them an EIN number rather than your social security. You don't, even if you decide that you don't want to be an LLC and you just want to remain a sole proprietor, you can still have an EIN number, or you can still apply for an EIN number as a sole proprietor. So don't think that you can't do that just because you're not an LLC. You can, and it's advisable that you do. So that way, every time somebody asks you for your ID number, you give them the EIN number, and that's it. Your EIN number is attached to your social security number. So the IRS, they know it's you, right? So if anything occurs, they know that, and they know that, okay, this EIN number is attached to this SS number. That's all they need to know. So you don't have to worry about that. And that's one of the reasons why I suggest that no matter what type of entity structure you choose, well, there's some entity structures where you have to have an EIN number. For example, if you're a partnership, of course, you don't have a choice. As an 1120S, if you elect to be taxed as an S corporation, you don't have a choice. If you are a C corporation, you don't have a choice. The only time you have a choice is if you are a sole proprietor, or if you are a single member LLC, you have a choice to use your EIN number or use your social. Now, as a sole proprietor or a single member LLC, if you also have employees, or if you collect sales tax, then right. So then you are at that point, you do have to have an EIN number. because that EIN number has to go onto your payroll tax return when you file it, and also your sales tax return when you file it. So that's the only time you're required to have an EIN number as a single member LLC or as a sole proprietor. That, of course, would be if you have sales tax or if you have payroll. But outside of that, if you're just a behind the chair booth renter or a salon suite renter, and you don't have any of those obligations, then you're not required to, but I strongly advise that you do. Okay. So the next thing is business bank accounts. Why are they important? Well, as we spoke about earlier, a lot of businesses, salon owners, booth renters are usually LLCs, right? They register their business with their state as an LLC. So as an LLC, you are required to have a business bank account. So it is a requirement. Okay. And I have seen where people say, okay, well, I'll get a business bank account. But then what happens is they have their personal, but they're so used to commingling funds that they'll have their personal account, then they'll have their business account, and then they'll start working out of both of them. They're like, oh, they'll start commingling. Oh, they'll start putting business funds into the personal funds into the business. So then it's almost as if, okay, so why did you even bother, right? So the best thing and best practice is keep your finances separate. It's also important for tax purposes. When it's time for us to prepare your taxes, it's so much easier when you have everything in one account. Because if you didn't maintain your books, which you should, and that's something I'm going to talk about, I think, in the first boot camp, part 3 rather. If you didn't maintain your books, okay, if you at least have a separate bank account, it's so much easier for us to go through to say, okay, well, we know everything in here is business. The only thing that would be not business is when you transfer money out from that business account to your personal account. At that point, we know that that's just a transfer, but everything else that happened is business. So then we can figure out, we can now create your financials based upon what's in that account. But if you're commingling funds, you have to figure out, okay, well, what's personal, what's business? We don't really know. In addition to that, if you should ever get audited by the IRS, if you're commingling funds, they start to look a whole lot deeper into the audit. They start to really drill down. I used to be an auditor for the Department of Revenue, so I know that I used to do this. If I'm auditing you and I realize that you have a bank account that you use for business and personal, I used to get in there and start to really see, okay, what's going on? Because I know for a fact when you're commingling funds, you cannot keep up with what's business and what's personal. It's impossible. It's impossible, because people who commingle funds usually don't maintain their books either. They tend to be those folks that say, okay, at the end of the year, I'll figure it out. I'll just pull out some receipts and look at my bank statements and start trying to figure out what's what. Well, I can't figure out when a purchase that I made 3 weeks ago, I forget what it is. Let alone if I was commingling funds, I wouldn't even know whether or not that's personal or whether or not it's business, unless in the description area, it clearly says salon centric. Okay, well, in that case, I know that that's business. Or it may say Sally's. Okay, I know it's business. Or it may say Evolve. Okay, I know it's business. Or it may say Vigaro or Square or whatever. But then there are several transactions that don't have those identifying distinctions that let you know, oh yeah, this is definitely business, right? So you want to make sure you keep that separate for the purposes of, once again, if you ever get audited, for us to be able to, people like myself, to be able to prepare financials if we have to, and also piercing that corporate veil. If you're an LLC and you're commingling funds, you just destroyed every single reason why you had the whole entire purpose of you becoming an LLC just got destroyed, because here you are now commingling funds. So you want to make sure you don't do that. Then also, how many accounts should you have in order for your business to run in a smooth manner, where you're able to put money aside for all the necessary things that you need? Okay. What I believe in systems, right? I believe in systems because systems creates ease. It's so much easier to run your business if you have systems in place. If you have systems in place, then it's so much easier for you to make money, because you can see exactly what's going on. You can see where your money is. And there's so much you can see, okay, when you have systems in place. So one of the things that I set up for my clients when I'm creating their systems is, okay, how are you going to handle all of your different obligations, financial obligations? Okay. For example, paying quarterly estimated taxes, that is required. Okay. Not only is it required, but if you don't do it at the end of the year, you have this huge tax bill. I would rather pay $5,000 every quarter than try to find $20,000 at the end of the year at tax time to hand over to the IRS and or to the state. So paying those quarterly estimated taxes is so important. But then when you have calculated how much you need to pay and you're setting it aside, you don't want to keep it in your operating account. Why? Because you might spend it. You might say, oh, I have an extra $10,000, not realizing that that's your quarterly estimated taxes. And when it's time to make the payment, it's not there. So you want to have a separate account for that. Also, if you sell retail, sales tax, very important, if not more important. Sales tax and payroll tax are even more important. You keep that separate, because when it comes to sales tax, you are only the custodian of that money. So which means that you're collecting that money on behalf of the state. So when a person buys a bottle of shampoo from you, let's say $10, and the tax, so it's $10, that's what it costs. You paid $5 for it. They're paying you $10. Your profit is $5. Oh, and by the way, there's a 10% tax that you have to collect. That 10% tax is not your money. It goes to the state. So that means that you're collecting the money on their behalf. So you want to make sure that when it's time to turn that money over, you have it to turn over. Because if you don't, it's almost, they look at it as if you're stealing money from us, because this was not your money. So you want to keep that separate. So you want to have a sales tax account to put your sales tax money in. And then you pay that out every quarter or every month. Every month, depending upon what state you're in and how much volume you have. All depends on that. Same thing with payroll tax. You are collecting, if I work for you, okay, and you're withholding income tax from my paycheck, that's my money. That's my money that goes to the IRS, both for me to pay my taxes, and part of it is Social Security for my future. So you're collecting that money. You're the custodian of that money. You want to make sure that when it's time to fork that money over to the state or the IRS, that you have it. And one way to have it is to make sure that every single pay period, or however you decide to do it, you take that money out and you put it in a separate account. So it's time to pay your payroll taxes. You can just write a check, or not a check. Who does that anymore? You can just transfer the money to the state and to the IRS. And then you have your retirement accounts. Man, I can't even talk about this one enough. As beauty industry professionals, we work for ourselves, right? We try to not pay taxes. We want to minimize our taxes to the best of our ability. So then what do? We don't report all of our income. Okay, that's really cute when you're young, okay? But then as you start to get older, you start to realize, well, darn, okay, I don't want to be doing this at the age of 50 because I have to. I want to be doing this behind the chair because I want to. How are you planning to make sure that that happens? What are the steps you're taking to make sure that you're not stuck behind the chair at 50 years old because you have to? And not even just 50, because it's still young, 60, 70. I work with some people, what lady, she was 70 years old, still behind the chair because she had to be. When I had my salon, I felt so bad for her. She just didn't save any money, okay? And she was always talking to the younger stylists saying, don't be like me. Don't be like me. I'm only here because I have to. I wasn't thinking about things when I was younger. I made all this money and I didn't think about savings. I didn't think about retirement, but most importantly, I didn't think about Social Security. How am I going to live? At the very least, if you're not saving for your retirement, at the very least, you want to make sure that you are putting money into Social Security so that at least you have that. But if you're claiming that you're not making any money, that means that what's being built up in your Social Security account is not a whole lot. So when you finally do retire, you're going to have $200 a month or whatever it is that you're going to have to live on. So keep that in mind when you're saying to yourself, oh, you know what, I'm going to try to pay as little tax as I can, therefore let me not report all my income. Think about that. So, and that's why having a retirement account is important. So you put money aside for retirement. Then of course you speak with a financial advisor and they will advise you on the best way for you to invest that money based upon what your goals are, based upon when you want to retire, how old do you want to be when you retire, how much money do you want to be earning when you retire. They'll ask you all the relevant questions, okay? And then at least you have the money in your retirement account, so you can now start to use that money to invest based upon what your financial planner has advised. So you want to keep that money aside. And then, of course, your business savings account. We all need a savings account, okay? Put something aside for business, whether it's 10% of your net revenue at the end of the month, whatever it is, put something in a savings account just in case. Look at what happened during COVID. I mean, that was totally unexpected, right? A lot of times we can see things coming. We're like, okay, I'm about to drown. I can see it coming. Okay, I need to somehow save myself. COVID hit us upside the head and blindsided us, okay, because we didn't see it coming. But worst of all, it lasted, and we're still dealing with it. It shut us down. It shut us down. At least in during other situations where savings comes into play, at least you can say, okay, I'm about to go under, but let me do this to make sure I stay afloat. So there's so many other things you might be able to do. But when COVID hit, we couldn't do anything except sit down at home and depend on the government to give us money to survive, right? Some got it, some didn't. So you want to make sure you have some sort of savings account. So really what I do is, when I speak with I don't like to use the word coach, I'll say when I mentor the stylists that I work with, we set up these systems and we say, okay, here is the spreadsheet. Let's look at this thing and see what we're going to do. And we have different sections. Say, okay, and this is what you can do as well. What percentage of my net income do I want to put in my business savings account every single month? What percentage should I put in my retirement account? What percentage should I save for quarterly estimated taxes? All that stuff is laid out on the spreadsheet. So when you start plugging in those numbers, it automatically tells you, based upon what you've plugged in, here is how much you need to put aside for retirement, put aside for business savings, and put aside for, estimated taxes. And it's not as if the money is not there, because the way the spreadsheet is set up, it's based upon the net revenue, what's left over. So clearly you have something left over. And now here's how we're going to disperse that money. If you have whatever your plans are, whatever your ultimate goal is, okay, every single step you take should lead you to your end goal, whatever that is. And it's not a quick thing, when it comes to your finances, trying to get from point A to point B. It's not a quick thing. Like, I never say, all right, let me show you how to make $100,000 in 6 months, or I'm going to show you how to be a $600,000 stylist or $100,000 stylist. I tell people, yes, these are things, these are goals that I can help you reach, but you have to make sure that you follow a certain guidelines. It's not a quick thing, right? I'm never going to promise you something quick, because to me, fast money is not great money, because if you get it fast, more than likely you're going to spend it quite just as fast. But if you have a strategic plan, a long-term goal, a long-term view, you're going to see your business start to grow. And the great thing about the beauty industry is that the money that you can make is unlimited. It's unlimited. You can make so much money. Okay, you can make so much money either based upon what you do and what you charge. And then also, if you decide to start your own business, then you have stylists that are also working, where you are working together and they're working for you, or however you want to, however you want to say it. Some people say, well, I don't like saying someone is working for me. So however you decide to phrase it. And so now you're making money, you're making money off of them as well. So there is so much money to be made, and you can make a lot of money. I know I made quite a bit of money as a stylist. So it just so happens that unlike with a regular job where you are pretty much making what you're making, it's not going to change. You get a 2% raise every year or 4% raise every year, and that's it. As beauty industry professionals, our potential is limitless. It is limitless. Okay, so then the next account is your operating account. Operating account is basically where all the revenue comes in for the business and the expenses go out. And talking about revenue, and this is something that I'm not going to get into here, but just to briefly talk about it. If you have multiple streams of revenue, more than one stream of revenue, you want to make sure that you also are tracking each stream. It's extremely important that you track every stream. Okay. And most of the work that I do is inside of QuickBooks Online. And with my clients, I set them up in a way that all of their streams of revenue is obvious. So we can actually print a profit and loss statement based upon their streams of revenue. It's important you do that because you want to know how each stream is working. And like I said, I don't want to go too deep into that, but that's just something for you to think about. That's something for you to think about. Then also, let's see what else. Okay, yeah. So that's it. So yeah. Another thing is the one bank account, or rather the one banking system, not banking system, but how just like you have Bank of America, you have Wells Fargo, right? So I guess institutions, that's what I'm looking for. The one banking institution that I recommend is a banking institution called Relay. It's Relay. I think that's what it is. And the reason why I like Relay is because it is so easy to set up multiple bank accounts without any hassle. Some of these regular banks, usually you have to open up a new account. You got to apply for the new account. Each account you open up, you got to apply. With Relay, you don't have to do that. Once you open up one account, you have the ability to open up several other accounts as well. And it works well. Relay plays really well with QuickBooks Online. So all of that, you can it's a huge ecosystem. You can connect all of your accounts to QuickBooks Online, and then you can just transfer money back and forth. So that's really, that's a really great option. So you have your operating account and all these other different accounts. Of course, your retirement account would not be connected to QuickBooks. That won't be connected to QuickBooks at all because that's personal. Okay, you just transfer that out. But when it comes to your estimated, your quarterly estimated accounts, that also, you don't have to necessarily connect to QuickBooks because that is also a personal thing. The only accounts you would connect to QuickBooks would be your sales tax account, your payroll account, your business savings, and your operating account. But you can still open up an account with Relay, a quarterly estimated tax payment account, and also a retirement account, and transfer money into those accounts, but you just won't connect those particular accounts to QuickBooks because any personal account need not be connected to QuickBooks, just your business accounts. Okay, let's see what else we have. All right, well, I think that's all I have. I see I did really well in 55 minutes, so that's pretty good. Oh, how is it spelled? Relay? Let me see if I can pull up the link. Let me see if I can, let's see here, if I can just drop the link in. Here it is. And I found them because somebody had mentioned them to me because I was trying to do something and I was like, wow, and I really do like them. So I'm putting it in the chat. Let's paste that. So that's, yeah. And I think when I applied, I like it because it's I think I applied online. And it was really easy, just really easy. It was real easy. You're welcome, Sharice. Okay, so are there any questions? Does anyone have any questions that I can answer before we call it a night? Is everybody still here? At least if you're still here, just put yes in there. That way I know that at the very least, you're still here. So I know Sharice is still here. Okay, so let's see. Okay. Yes. One. All right, cool. So you guys are still here. So you didn't fall asleep on me. All right. So is the information I provided to you, was it helpful? Because I want to make sure that I'm providing you with something valuable. So if it was helpful, just say, just put a 1 in the chat box if it was helpful. Okay, cool. All right, great. Okay, wonderful. Good. So I'll be having part 2 next Monday. And I'll be talking about, what am I talking about next Monday? Let me see. Let me stop sharing. I think let's see. Okay. All right. So next Monday, I will be talking about, just want to sort of let you know, I don't know if you guys are going to be able to make it. Hopefully you will. Sharice, yes, for next Monday or this one? Well, Sharice, yeah, a recording should be available for all 4 days. But let me see what I'm talking about next Monday. Okay, so next Monday, we're going to be talking about, okay, misclassification of independent contractors. So are you being misclassified as an employee, as an independent contractor, when you're supposed to be an employee? Are you a salon owner that's misclassifying your workers? Why you shouldn't be, what you should be looking for when you're trying to determine how to classify your employees. And then, should a salon owner give a landlord a 1099? So as a salon owner yourself, I think Cherise is a salon owner. Should you be giving your landlord a 1099? And then also, booth renters, we know that you're required to give, the salon owner, you're required to give the person who you're renting the booth from a 1099. So now the question is, should a salon owner give the person they're renting from a 1099? And then we'll be talking about what type of returns you should file based upon your business structure, which is something we kind of talked about today. And then I know for day 3, we're going to talk about bookkeeping